Welcome to the Aviation Insurance Podcast, the podcast that helps aircraft owners and aviation businesses learn and understand the complex world of aviation insurance and risk management. From the basic principles of aviation insurance to risk management techniques and updates on the aviation insurance market, the Aviation Insurance Podcast is your guide to traverse the world of aviation insurance. Now, here's your host, Tim Bonnell.
Well, welcome back to the Aviation Insurance Podcast, where we continue our journey into looking into all the various facets of aviation insurance, safety, and risk management. And today I've invited a couple of folks onto the show who I've been working with for more than 20 years. Aviation operations, aircraft operators, they have different exposures, and a lot of our aircraft hull and liability policies or aviation commercial general liability policies don't cover them. And so I've invited Hal Hunt and Robin Reimer here today with the National Hangar Insurance Program to discuss some of these other exposures and policies that their program provides, and to share kind of a little bit about how that came about. So Hal Hunt has been a pilot for over 40 years. If you can't tell by looking at him, he's a 20-year U.S. Marine Corps vet and a retired KC-130 squadron commander. So he's over 4,000 hours in 6 types of aircraft. He was joined the National Hangar Insurance Program that they're a part of in 2003 and became the program manager in 2012. And the program's been providing solutions for airport-related property insurance to independent agents across the country since 1991, but I'll let Hal share more about that in a minute. Robin graduated from Oklahoma State University with a bachelor's in management information system, joined National Hangar in 2003, happy 20-year anniversary last year, and became the assistant program manager in 2012. And so Hal and Robin worked together and have been doing so for many years to bring these solutions to the aviation market. And so just with that introduction, just Robin and Hal, welcome to the show.
Thanks, Tim. Thanks for having us.
Yeah, absolutely. So as we talked about, we had a gap, right, in the market with the need for other products for property, business auto, those type of things. Just tell me kind of how about, the National Hangar Program came together and what you do in general.
Thanks, Tim. So my predecessor was a gentleman named Ron Davis, and similar to yourself, he had been a producer for years, and he had trouble finding continuity in the aviation property market. It was kind of spread out everywhere. There wasn't really a good source for it. So he teamed up with the Travelers, like you mentioned, in 1991, formed the National Hangar Insurance Program to specifically focus on airport and aviation property coverage. And if you kind of think of it like this, we will cover anything on an airport or aviation related that doesn't fly, and even off airport, that's as long as it's aviation related. So Ron started the program in 1991. I joined him in 2003. We've been, like you mentioned, we've been partnered with Travelers the entire time. Robin and I were hired within a month of each other, and just kind of FYI, I'm in a phase out process. So Robin will be taking over the program in early 2025, about a year from now, and she's more than capable. That's just a quick data dump on the program. Anything specific in that background? I might add, it's really cool. Our partnership with Travelers couldn't be stronger. The first account executive we ever had at Travelers is now the president of all first-party insurance at Travelers. The chief underwriting officer was our second account executive. The COO of Travelers was also an account executive at National Hangar. So it's a really strong relationship.
Yeah, that's not common in a partnership like that. Well, obviously, my dad, myself, we were working with you many years ago. Certainly when you guys entered the program, and it's filled a very vital need. And so some of those, a lot of what we're talking about today is something you cover in the broad form commercial property policy, and you also have offerings in the business auto and some others we'll get into. But obviously, most airports have hangar exposures. They have other things like, tugs, fuel trucks, tools, equipment. I mean, it goes on and on, furniture, computers. But what are some of the key coverages provided to aviation businesses and hangar owners in the commercial property policy?
Well, I'll just go over a couple of them real quick, and then I'll talk probably a little more about things that folks are less aware of. Obviously, you mentioned the building coverage, and building coverage can encompass a lot of things. And in a really good way, kind of like I summarized it earlier, we cover anything on an airport that doesn't fly. When you think of building coverage, think of the building and anything that's permanently attached to the building. So the flooring, the fixtures, the carpet, glass, all of that, heating and air conditioning, all of that is included in the building value. And then you also mentioned your business personal property. We call that YBPP, and that's pretty much everything else. So anything that's used in support of the business, it can be tools. We're talking furniture, appliances, just about anything that's not permanently attached to the building can be covered as business personal property. What's often overlooked is what's called personal property of others, and it's exactly, as it sounds. It's personal property, similar to the business personal property, but it's personal property that doesn't belong to the insured. And that's really key. Some agents, there are rare, but there are forms out there that I've seen that can combine those, but most forms don't. So some agents will often overlook the requirement or the need for the personal property of others. Some other coverages, they're known as inland marine. You kind of touched on some of those. Tugs, fuel trucks, we cover all of the above. Anything that's used outside the hangar, then we like to cover them as inland marine. The kind of the magic number that is, will it be within 1,000 feet of the hangar? If not, then it should be covered as inland marine. Now, something to keep in mind when covering inland marine, an insured may tell an agent, "Oh, well, no, my fuel truck never goes greater than 1,000 feet from the hangar." But lo and behold, a buddy calls him across the airport. He needs a fuel truck, and all of a sudden, this thing is, a mile away from the scheduled location, and you could have a coverage issue. So I always encourage agents, if it's used outside the hangar, we call it inland marine, and that would include a tug, a lab cart, a huffer, just about anything you can think of that's mobile. Now, some lesser known coverages, Tim, that are critical, that our form includes, and a lot of these coverages, if you do like a form comparison, our coverages are significantly higher. And one example might be debris removal. So tornado comes in, it takes out your building. Yes, our form will replace the building, but some forms don't pay for the debris removal, or the limit for the debris removal is quite small. Ours is 25% of the building value, or up to $250,000. That's an additional coverage not included in the building value. It's just thrown in on the form. Some other throw-ins might be ordinance or law. Our policy comes with $250,000 of ordinance or law. So if you have a building, that building, for example, was built maybe back in the 80s, the code has changed since then. So the ordinance or law coverage of $250,000 will help bring that building back up to code. And again, that's an additional limit. That's not included in the building value. Just kind of continuing along the same lines, we have $100,000 of pollutant cleanup. So an example might be this is rare, but you heat your hangar with heating oil. That heating oil, there's a spill. The EPA has to come in. That's quite expensive. You have an additional $100,000 to clean up the fuel spill. The list goes on and on, Tim. We have employee tools, We have what's called expediting expenses. Extra expense is key. So that's just kind of a summary in a nutshell of some of the additional coverages and some of the important coverages that would be associated with the aviation industry. Just a couple more quick bullets. Our policy also comes with what's called newly acquired. And so if an insured purchases a building, but they fail to tell the agent, then they have automatic coverage up to 6 months until the agent is notified of $2 million. Again, an additional coverage for business personal property newly acquired. That limit goes all the way up to $1 million. So there's some fairly substantial coverages that are thrown in with our policy form.
Yeah. So Robin, did you look like you had something you might want to add there, or he hit the highlights?
He hit the highlights. He did a great job. I think maybe something to mention is to fall back to PPO. I think it's very important for agents and insureds to know that the PPO has to be something that you're using in your business. It can't be like you're allowing someone to store their property in your hangar and they have access to your hangar. So do you see the difference? Like that PPO, it's still within the owner's control. It's not really within your control just because it's in your hangar. And I think that distinction it's very important to understand that.
Yeah. So personal property of others that you're talking about is similar to the aviation commercial general liability coverage, or it can actually be on an aircraft policy if it's got a broad form. Endorsement expansion is the hangar keeper's legal liability. I think the key in both is that a bailment has to have occurred, like it's been entrusted to the named insured. And so a non-leased or item that's been entrusted, not just, something that they regularly store there. I think the inland marine coverage that you mentioned, Hal, is big. And, I completely agree. Fuel trucks should go there. Unless, of course, it's licensed for road use. Then it has to have a business automobile policy. That's a big deal. And the same story you just said, I think, is true. Well, it never leaves the airport. Well, sometimes the Phillips across the street, the farm. I mean, there's just all kinds of circumstances. I'm sure you have a 1,000 stories about fuel trucks tend up in the wrong place and the challenges with that. But fuel trucks, big deal, because if they are licensed for road use, it needs to be on a business auto policy. And really, it shouldn't be YBP ever, in my opinion. There's a lot of things, but that inland marine, there's a lot of things that can be done. I think the employees' tools, that was a great thing to mention, because a lot of people don't realize that, the employees own many of the tools that they work on in these maintenance shops. And that can be tens of thousands of dollars in tools for each mechanic. I mean, $50,000 is easily what one mechanic sets of tools is, and their personal, homeowners or, whatever type of policy, they do not provide that level of protection. So, aviation businesses that have mechanics that provide that coverage is doing their employees a great service. Tools and equipment, again, tools can move around. They can leave the premises. I think that's really good on the inland marine. And one of the ones you didn't mention, maybe it'd come up later, is just, property and transit. Obviously up to certain limits, but that's one that, aviation businesses are constantly shipping things. And it comes with hair, and there's different, I think it's not supposed to go through the postal service and that type of thing, but that's another important coverage people don't think about when they're shipping, some higher end value, higher valued, parts and that type of thing. But yeah, the YBPP, that's kind of where, a lot of people don't realize the amount of money they have in spare parts and stock for things they're going to sell. That's YBPP as well, the business personal property.
Correct. Yeah. And Tim, a unique feature that we offer, and some folks don't realize this. I mentioned anything on an airport that doesn't fly, but if you have an aircraft, we also offer a non-operational aircraft endorsement. This is substantially, typically, and you would know this better than I, but the rate on this is substantially lower than say a ground-only whole policy. But there are some specific occasions that it has to meet in order to be a non-operational aircraft. And some examples might be an aircraft that's being manufactured, or an aircraft that's being restored or a kit aircraft. The coverage is not designed for the ag operator that his aircraft is down for routine maintenance and he wants to, replace the engine and he's taking it out of service for a month. So he wants to move it on to a non-operational aircraft endorsement. That's not the intent. The intent is for a longer period of time. Another great example for the non-operational aircraft endorsement would be a museum display. We write a lot of museums and we have their aircraft on a non-operational aircraft endorsement. So with that in mind, property policies exclude aircraft, so you always need to think about adding it back, a non-flying aircraft on the non-operational aircraft endorsement.
Yeah. What are some of the, you talked about some of the things that, hangar owners, aviation businesses often overlook. What are some of the other, things that you see very regularly from aviation businesses, aircraft operators that just is missing, or mistakes that are regularly made when it comes to these exposures?
I'll take this one, Tim. The most overlooked coverages, and they're actually very, very important coverages, and two of them are business income and extra expense, which is probably no surprise to you. Business income will pay for the actual loss of business income that you sustain due to the suspension of your business. Of course, it has to be caused by a covered cause of loss, and there has to be direct physical damage, and it has to be to property that's at a described premise. So the premise has to be on the policy. And business income is your net profit or loss plus continuing operating expenses. So again, your net profit or loss plus your operating expenses. And just a couple of examples of operating expenses would be your mortgage. And if you don't have a mortgage, it could be your rent. A lot of contracts require you to continue to pay out your rent. You might have your taxes. Payroll is a very big one. If you want to keep those employees staffed during your suspension period, then you're going to need some extra income to keep them on board. The next one is extra expense, which is a little bit different. So this is an expense that's above and beyond. So it's an expense that you normally wouldn't have had you not had the loss. So let's say some of your equipment is damaged, and in order for you to stay afloat while it's being repaired, you need to go out and rent some equipment. So it'll pay that cost to go out there and rent that additional equipment. Or even kind of a bigger expense would be if your facility is damaged and you want to temporarily relocate. It will pay for that temporary relocation to keep your business up and going. So your computers, chairs, desks, kind of anything that you're going to need to keep up and going. And to kind of drive the importance of this home, I pulled up a few articles for you guys, and one was Trusted Choice, and they did a survey, and about 50% of the businesses polled do not have business income coverage, which is huge because about 50% of businesses will fail within 3 years after a major loss if they don't have business income coverage. And then just kind of another article I pulled, it was a FEMA article, which had very similar statistics. 40% of businesses will fail after a major loss. And if they do reopen, 25% will fail in the first year. And then 75% will fail within 3 years if they don't have a good business plan to continue on. So if a disaster strikes and your income ceases, a lot of small businesses actually don't have the capital to continue their financial obligation that they have. So that business income coverage is extremely important. But don't just get hung up on small businesses. Large businesses still need this coverage also.
Yeah, absolutely. Those are really good. And combining that with what Hal mentioned with like the debris removal and ordinance and law, most people think, well, I've got $100,000 building. I need $100,000 coverage and I'm good. And they don't consider that, well, yes, that building needs to be replaced, but people don't understand. And I didn't, obviously, until I started looking at numbers at what it costs just to remove debris from a fire, from a a windstorm, any one of these catastrophic events. And, obviously ordinance and law, you don't find that out until too late. There's been an ordinance that requires you to do this extra amount of stuff. Think about all the old World War II hangars that we've had to place over the years. But this business income, especially, anyone with a maintenance shop, anyone that's generating revenue in their location, any type of event like that's going to put you without a facility to do business. And when you don't have revenue and you've got a high amount of payroll, that gets to be a real challenge. And, typically, to your point, Robin, it's tough to hire really good people, trained people right now. And so you want your best people, your best mechanics there. And without that business income coverage, that's why those statistics are there. People didn't count on the fallout. What else comes as a result of this particular potential loss? And then, all those other things. I need to relocate. I need to, have a temporary facility. I need to, extra equipment that adds up to tens of thousands of dollars, as really quick. So I think those are, a lot of things people don't think of. I think those are very good ones that you guys mentioned. And obviously, commercial property policies are vast. They cover a lot of things. And, if we were to go into every detail about them, we'd be here for days on end. I mean, there are professional classes for people like us in the insurance business that are, days on end just on the commercial property policy. So we just wanted to kind of get a highlight, of some of the major coverages, some of those, things you mentioned that a lot of people miss. And I think you guys hit those really well. What are, just as far as the market, in the whole liability and the aviation commercial general liability, we've had, a lot of challenges leading to rate increases with, the increased cost of handling claims, increased cost of labor of all products, of the awards that are handed out in liability. What are the current challenges in the commercial property insurance market today? Whoever wants to answer that.
I can take that one, Tim. I would say, and it's interesting, you kind of touched on it with the cost of labor, the cost of hire. Our biggest challenge, and this is going to probably come as a little bit of a shock, but our biggest challenge is what we call insurance to value. And so, and you kind of hit on it a little bit, but we are seeing since COVID hit, if the statistics are out there, but across the board, just costs alone have increased about 20% since COVID hit. The cost of labor over that period of time, it's very similar, 15 to 20%. And if you haven't tried to find someone, even around the house, come out, can you repair my fence? Can you repair my roof? If you haven't tried that lately, it's really difficult to find these folks. So as a result, that just the labor costs alone, that they've increased the replacement cost of these buildings so much that we're having trouble keeping up with it. Now, with that said, the insurance to value and what kind of plays into this, one of the pieces is damageability. But one of the advantages that our form brings is we don't have what's called the roof resurfacing endorsement. And this is a huge impact on the cost when you go to replace the building. So one of the things I would encourage every agent, every insured, because it's often just kind of buried in the policy language, is keep an eye out for this roof resurfacing endorsement. And this endorsement basically says, it looks harmless enough, but it basically says your roof will only be paid the repairs will be paid at the actual cash value versus the replacement cost. So what does that mean to you? It's the depreciated value. So you mentioned World War II hangars. These metal buildings, it's not uncommon at all to have a 30-year-old, 40-year-old, 50-year-old building. Folks have a hailstorm in where you're from up in Kansas. Your roof is destroyed. They're thinking, oh, gee, I'll get a new $500,000 roof. Oh, sorry, your building is 45 years old. Here's your $5.68 settlement check. So there's a huge difference in coverage, and I can't emphasize that enough. But getting back to our number one challenge, our system, Robin and I are very conscious of it. We run what's called a BDS report. It's the Marshall Swiftback industry standard for the replacement costs on buildings. It's built into our rating engine. We run these day in and day out. We have a really good feel for what the replacement cost value of a hangar should be. And Tim, when Robin and I started, it wasn't uncommon 20 years ago for a hangar to be insured at $25 a square foot. Then it went to $35, then it went to $40. And depending on, and I'm asked this a lot, I'll get a call from an agent saying, "Hey, Al, what's your latest replacement cost value?" And it's really regionally dependent. What it costs to replace a roof in Oklahoma versus Wisconsin or California or Alaska. We have accounts in Kodiak, Alaska. So you can imagine what the cost is to haul all that metal in there. But with that said, the days of the $45 a square foot hangar are long gone. Robin and I recently had an event, relatively simple hangar, just had a small section upstairs where I wouldn't even call it an office. It was in Tulsa, Oklahoma. We had it insured at $93 a square foot. We felt like it was adequate. After all was said and done, replacement cost on the building, there was a fire, and it was $125 a square foot. So a pretty general, a reasonable rule of thumb is $75 to $100 a square foot. We keep an eye on them regionally, but that's our number one concern, is getting these values up. And not only are we, hopefully bringing in enough premium to cover the losses, but we're not doing our job if we're not taking care of an insured. If an adjuster comes out there and he says, "Gee, Mr. Insured, you're underinsured by 40%," we've got a significant problem. And you can attest to this. If you do have that situation, the insured who told us, who was adamant what the replacement cost was, who knows what he paid to build the building, the first thing that's going to happen is he's going to say, "Tim, why did you and Hal allow me to underinsure my building? You guys do this every single day. Why did you allow me to do this?" So that's why Robin and I are just absolutely adamant about getting these buildings insured to value. So, like I mentioned a little bit, the biggest factor it just caught us by surprise. Who knew that inflation was going to hit in 2020 the way it's hit? The cost of labor has gone up as much as it has. So we were kind of caught in a catch-up mode, but you've worked with us, like you said, for 20 years. You've seen over the past few years how we're attacking these values, and we have to continue to attack.
Yeah, and it's in the best interest of everyone, the insured and everyone involved. Yeah, I think that, and I don't want to go into this because we're kind of getting towards the end of our time, but it's really important to look at how that valuation we've talked about, the replacement cost. There's replacement cost, which is what most buildings are typically written on, but a lot of them will be written with what's called a co-insurance, meaning if you don't get the value to a certain amount, there's going to be, and there could be a very substantial deductible, which is a co-insurance penalty, basically, that could be suffered if your value is not correct. Now, the nice thing about your policy is you write the replacement cost without that co-insurance factor. Other programs will offer typically replacement cost with the co-insurance. And I think that's really a challenge, especially as you talked about it with the rapidly increasing costs. Your valuations can get off really, really quick. And so I know some people to get by that will do agreed value, which means, just like an aircraft policy, if you're insuring this building for $100,000, it burns down, you get $100,000 and not the cost to replace it. So there is a difference, in the policy that you guys are offering with some of the others out there. And I think that's something really important to pay attention to. That said, even within the commercial property policy, you can have the building, and some of the coverage is a replacement cost, the cost to replace it, within reason. And, some of them can be the actual cash value, which, as you said, is the cost minus depreciation, or what it's worth really today. And a lot of people get confused because that's the way most automobiles are written, is the actual cash value. So they think on airplanes, on buildings, well, they're just going to pay what it's worth today. Well, it depends on how it's written. And that's something I thought was, a lot of people may not get or understand. So I thought I'd point out, just looking at time, I just wanted to highlight, and obviously there can be another episode another day on these topics, but there's another whole host of issues that, or exposures really is what I mean, that these aviation businesses have, that you have some solutions for. Could you just highlight, some of these potential exposures, or the policies you have to address some of these other exposures that aviation businesses and aircraft owners might have?
I'll quickly highlight auto. Melody Mallory is our main auto underwriter, and I asked her to give me just a little bit of information so that I don't butcher what I'm about to talk about. And I'll quickly touch on it. The exposure base for a business auto for aviation. So your exposures are owned or your long-term leases, which kind of fall within the same realm. And then you have your borrowed or hired autos, which those are autos that are not owned by your insured or your employee. And then you have the non-owned autos, which are the most commonly ones, which it means your employee is driving their personal auto. And so every business, every aviation business, they probably have an auto exposure, especially in that non-owned auto category. So I think that's very important to understand. And just quickly, our policy has $1 million limit on it. We do quote uninsured, underinsured motorists, no fault and PIP based on the state. We provide med pay at $5,000, and then of course comp and collision with $1,000 deductible. But just note that, as you know, with inflation, the auto industry has drastically changed, and the value and the cost of autos has risen drastically. So please don't get hung up in that $1,000 deductible, because that's more of a personal lines deductible, right? Mm-hmm. All of us have at least $1,000 deductible on our personal auto. So if the value of your autos that you have are pretty high, that deductible is going to be a lot higher than $1,000.
Yeah, that automobile, if you've had to buy one, anything lately, or the cost to replace a battery's gone up quite a bit. Auto is interesting, fun fact, because on an aircraft, we're insuring the physical damage, the, hull, and then the liability for third party bodily injury, property damage, and passenger legal liability. But on the auto, you've got liability, and then you've got comprehensive, and then you got collision. And collision or upset. And the one thing that, is always fun to share is that there is a collision that's not covered under collision, and that's is a collision with Bambi, as I like to say. That collision with animals is actually in your comprehensive coverage. So I guess if that's their only collision worry, they should carry comprehensive and liability. I always thought that was weird that, collision was collision with anything but an animal, and that falls under comprehensive coverage. But definitely, I just to highlight what you said, Robin, is every business has a non-owned exposure pretty much. If they have any employees at all, if they ever rent a car, I would also say that it's important to read the definition of your non-owned coverage, because some of them, limit it to other people's car. And it could, exclude your employees. And so I thought that was a really good point. Just real quickly, were there a few other, I know cyber is one you guys offer, anything else like that, without getting into all the details that people might want to think about?
Tim, I can take the cyber. I'll keep it super short. I know we're about running out of time, but the cyber is critical, especially for the larger companies. You've seen, Target, even my parent company was targeted. We were completely down for 2 weeks. Recently in Tulsa, a huge healthcare system was down for 3 weeks. They had basically no computer capability. You can imagine what that would do to a hospital. But the claim scenarios go on and on, Tim, and we see them regularly. We even had an agent that was that was hacked, and he paid the ransomware to basically the ransom to get his database back and be able to log in. So it's a huge exposure to just about any insured out there of any size, and even the small mom and pop shops have that exposure. So if you want me to elaborate or give a couple of claim examples, I can certainly do that. But I would definitely emphasize the exposure of cyber liability.
Yeah, I think that's good. And that's a whole different topic, so we don't have to get into all of it. But I think that's one thing a lot of companies think is I'm too small. And I think what you said is important is, it's a lot of times the smaller ones that are attacked. And they sometimes people are going after the easy money. The people have less IT infrastructure, less, security. And so that's the easy opportunity to go after. So I've seen the same thing, and I couldn't agree more. Every aviation business that has any digital presence in any way really has that exposure. So again, yeah, all these topics we could go on for days on. I just kind of want to introduce some of those, non-aircraft and airport liability type of exposures. So we've gone a few minutes over what I normally would, but it's a good topic to go over. But I just want to just provide that anything we didn't cover, bring up, or just any closing thoughts you might have, either one of you.
I'd like to add, Hal touched heavily on the underinsured area. Please don't think that this only applies to your building, because it applies to everything that you're using. So we're not seeing a lot of uptick and a lot of agents asking for us to increase, equipment and their contents. That's not being asked of. And if you go out and buy that stuff new, the cost of it has drastically increased also. So I don't want that area to be overlooked. Inflation and the things that are just happening in the property market, the uninsured value all around is probably the biggest issue that will continue in 2024.
Yeah, I think that's a good word. I know we have a mutual customer who's gone through a catastrophic loss, and the amount that's having to be paid out is shocking to all of us. Just something you'd think wouldn't be such a big deal. It gets out of hand really quickly when everything's concerned. And so I think, people typically are hesitant because they don't want to pay more for insurance. But, I assure you, unfortunately, this group, tried to purchase all the right coverages, but underinsuring is never a good way to save money. It'll cost you a lot of money in the long run. So I think that's a really good point. Well, really appreciate you guys. I know that there's so much more we could go into. Appreciate you keeping it simple and brief, so that I could understand it and our audience, and appreciate what you guys do in the industry. Hal, we'll definitely miss you when you retire, but we do know you are passing the baton to a very capable person, and been working with Robin for many years. So we'll be glad that she'll be taking that baton and running with it well. So thank you for your time and sharing your expertise here today.
Thanks for having us, Tim.
Yeah, absolutely. My pleasure. So that's all for this episode. Join us again next time as we continue navigating the waypoints in aviation insurance. Until then, enjoy clear skies and unlimited visibility.
Thanks for listening to the Aviation Insurance Podcast. If you found this episode of value, please share it with someone who would benefit from this information. Don't forget to subscribe in your podcast player so you don't miss any new episodes, and to help our show have more impact. This episode is brought to you by Aris Insurance Solutions, your flight plan for navigating the turbulence of aviation insurance. For more information, visit arisinsurance.com. That is www.aerisinsurance.com. Disclaimer: these episodes are for educational purposes only, and due to the changing regulatory and legal nature of the business, some information may change over time. Having a well-educated and experienced aviation insurance broker on your team is an absolute requirement to success in business and for managing your aircraft and aviation business risks.